Peter Eliades with you again. We've been gone for a couple of days. Hope you missed us. We went to see our brand new grandchild, first grandchild ever, young boy, Maximos Alexander Eliades. And if you get lucky, maybe someday in the next few weeks we'll show you a picture of him. But right now, let's get back to the market. By the way, as most of you know who watched the Thursday update, we didn't do an update again for a couple of reasons until today. One of them was that we were doing a report. We really encourage you to go and get that report. Yes, that's going to cost you. It's a whole $19.95. It's going to cost you, but what you're going to see in it is a really good explanation, a detailed explanation of some of the interrelationships in terms of how we do the cycles. So that's going to be in that report. And the other thing that's going to be in the report is a very special set of 4 charts that are going to show you a pattern that we are thinking could be the pattern that helps us resolve this final market high and when it might occur. And in fairness to those who have paid for the report, we're not going to show that particular group of charts online here for another couple of weeks anyway, just in fairness to those people who went to buy the charts. So if you're interested in getting the report, go to StockMarketCycles.com and you'll be able to buy the report online there for $19.95. Let's get to the market. This is a chart we showed you last Thursday, and you see the red arrows here on the DJIA. These red arrows represent the times. We went all the way back to 2007 with you, but these represent the most recent times when the Dow Jones Industrial Average did 3 things. Number 1, it went to a new all-time closing high. Number 2, at the time it did that, the ratio-adjusted McClellan oscillator, which measures internal momentum in the market, was below -5. And number 3, the ratio-adjusted summation index was below 740. We mistakenly said at one point last Thursday it was below -740. That was a misspeak. We should not have said that. It was below a plus 740. So these are the only times this has happened in the past almost couple of years now, going back to the first one that occurred was January 25th, a day before the January 26th high. Then once again on October 3rd, exactly on the important high that occurred there before the decline. And now it actually has occurred for a couple of days, I think for 3 days, where we had a new all-time high accompanied by ratio-adjusted McClellan below -5 and a summation index ratio adjusted below plus 740. So is it going to mean anything? There are no guarantees. This is no guarantee that the market's going to decline from here. But it's one of the things we're keeping a close eye on. And as you know from the indications we showed you, the prior times this has occurred either was not very good for just before a very sharp decline, or at least for a sideways consolidation, sideways to down, that lasted generally about a month. So if it's going to be bullish, if it's going to end up being bullish, that's what we would expect to see. Okay, there's one other chart in this group that we want to show you, that we showed you again recently, and that is the SOX. This is a weekly chart of the semiconductor index. SOX is the symbol. We've added a couple of things here that we didn't show first time around. One of them is the channel line. Now this is done on closing prices, not on intraday prices, but if you draw a line from the low, the closing low on February 12th of 16, all the way up to the closing, this is weekly, closing weekly low of December 21st of 18, and then parallel that off the closing high of March 2018, look what happened. Not last week, but the week before. We closed right on that upper channel line. That's point number 1. Point number 2, look below here to the RSI. The RSI indicator measures market momentum, and this is the ideal situation for a top when you have a reading above 70 and then the market goes up to a new high well beyond this high. Doesn't have to be well beyond as long as it's a new high. And as it does that, the RSI, this is a 14-period RSI, diverges and gets up to just around the 70 level. That's the ideal situation. So not this past week, but the week before, the RSI on a weekly basis got to 70.05, almost a textbook situation. What else do we have to show on this chart? Well, we showed you the bottom to top counts. George Lindsay, a cycle master, used to say that usually at important market tops, you'll see at least one bottom to top count, and depending on how important it is, you might see more than that. Well, we found a couple of quick ones here. You'll notice from the closing weekly low on December 18th of this past year to the closing weekly low of May 31st of this year is 23 weeks. If you go forward 23 weeks from that low in late May, it takes you to not last week, but the week before when the closing high occurred. There's even a longer bottom to top potential count, and that one starts all the way back at the closing low on May 13th of 2016, 91 weeks to this closing low on February 9th of 2018. You go forward another 91 weeks, it takes you to the week before last close. So we have 3 or 4 things going on here. A channel we came up to, an RSI negative divergence, a bottom to top potential count of 91 weeks, and a bottom to top count of 23 weeks. None of those things is a guarantee that we've seen a top. The SOX, the semiconductor index, has been very strong, and I'm not suggesting you jump in the way and say, okay, what a great time to short. What I am suggesting is there are some parameters have been met for a potential top here. Okay, let's go to the 65-minute charts, the projection charts, and this is one that we showed in the report that we wrote, and we went into a lot of detail on this to show people how this whole setup occurred here. Let's move over some and bring everything into view so you can see it pretty clearly. So we're going back to the low in August of this year, and as you can see, prices moved above the offset lines, the red and the blue offset lines, right in this time zone right here. And as that occurred, it generated an upside projection. The minimum upside was 3101.23. The furthest upside was 3149.99. Let's call it 3150. We had not gotten up to the 3101.23 as yet. We came very close before we wrote that report over the weekend. Guess when we did it? We did it today. The intraday high today on the S&P cash was 3102.61. Bingo. Another projection met, at least on a minimal basis. So we have all these things going on that are suggestive of, if not a market top of more importance than we might think right now, some kind of market top that could lead to a pullback from here. Again, no guarantees here. Just because we met the lower end of the projection doesn't mean we won't go up to the higher end. But once you meet the lower end of the projection is where you start to become cautious and say, maybe we should be looking for the possibility of a market top here. So that's it, a whole bunch of things. By the way, in the report, you'll see what happened. Here's one of the things we look at. You'll notice we broke above both the offset lines. Did we immediately go up to the projection? No. As a matter of fact, we came down after a couple of sideways weeks of consolidation and tested the lower side of these offsets. Remember, you go below both the offset lines, and that's invalidating the projection. It's almost incredible how the market almost knows where the lines are. It refused to break below the continuum between both the offset lines and once again took off to the upside. Today, for the first time since the projections were generated, we met this upside projection. That's it for now. Thanks a lot for watching. We'll be back tomorrow with another update.